There's another data point that very few people talk about. 73% of Canadians make less than $50,000 a year. So you can build all these fancy buildings. It doesn't cater to 73% of the population.
Hello, and welcome to Sink or Swim, a weekly podcast brought to you by RentSync, where we take a deep dive into the PropTech, multifamily, and rental housing industry. In each episode, we uncover the technologies and strategies used to help overcome operational challenges and increase the value of your multifamily investments. So, let's get into our conversation today.
All right, welcome back to Sink or Swim. I'm Mitch Fanning with RentSync, and joining me today is Bob Dhillon, founder, president, and CEO of Mainstreet Equity, a Canadian real estate company focused on acquiring and managing mid-market rental apartment buildings, primarily in Western Canada. Bob, how you doing today?
Good, Mitch. Every day's a gift.
Absolutely. So maybe you can do that intro some justice by expanding on it and kind of explaining how you got started in the apartment rental industry and specifically how you started investing in mid-market investments.
First of all, thank you for giving me the opportunity to tell my story or my journey on your show. My journey started out when I was 19, 19 to early 20s when I was flipping homes, and that evolved to buying and repositioning small apartment buildings. And then moving forward, I did every type of real estate, from strip malls, land development, commercial buildings, you name it. And during my journey, I found out that the best undervalued opportunity was mid-market apartment buildings in Western Canada. So then I started the Mainstreet Equity Corp, which is listed on the Toronto Stock Exchange, focused on mid-market Western Canada. Let me define mid-market. 80% of the buildings are smaller in size, and Western Canada is Winnipeg West.
So when did you have that? Because I think it's quite fascinating. I think you've definitely hit a niche there. When did you decide that mid-market was kind of your niche and kind of the thing that you wanted to like build out an entire business around?
Well, Mitch, let's look at the capital flow. Real estate is a capital-intensive business. So everybody's chasing these bigger complexes, which is 20% of the market. And 80% of the market are smaller buildings. So there was 80% of the buildings were smaller that had less bids. Institutional capital was chasing the 20%. Then our focus was, let's take it a step further, was mid-market add value Western Canada. Add value
right.
Meaning anything that we can increase the top line revenue by repositioning the asset. So we became the mid-market add value experts in Western Canada, Winnipeg West.
Well, obviously you've done a great job, doing that and focusing in on that in that space. So let's talk about kind of that space in Western Canada. Obviously, as a result of COVID, the Western market has, experienced an increase in vacancy rates. There's been a decrease in demand but according to, rental reports, specifically the rentals.ca 2021 that came out in March, there seems to be a recovery kind of happening with the vaccine rollouts. So really, I guess my question is, do you kind of agree with that assessment? What's your take? And kind of have we kind of seen the end of this and we're kind of moving into kind of better territory?
The population in Alberta has been growing nonstop during the last 5 years of the recession. So, when the oil prices fell off the cliff in 2014, our population grew by 5% in the last 5 years, 4.92% to be exact. So, population's growing, and then we have the lowest unit count per population. So we got approximately 45,000 apartment unit on a population of 1.5 million people, which is 2.9%. And let's look at the year 2020, pandemic year. Our population grew by 0.77%, while Ontario grew by 0.45%. So it's a supply-demand equation. Our vacancy went up. It's a combination of multiple things, but let's focus on two. One is a pandemic, two is the unemployment rate, people moving back home, and don't forget, Mitch, we have affordable housing. People can afford to buy condos and homes. It's not like Ontario and BC where you never be able to buy a home unless your daddy writes you a check.
Sure.
So for that reason, there's movement of people buying homes, population's growing, and we have the lowest unit count per population. So take pandemic out. If you take that out of the equation, and if you look at all these data points, I think vacancy rate will continue to decline. And it may not happen instantly, but on long-term trends, the next 18 months or so, we will see continued decline.
Now, as the market continues to recover and you guys are looking at, to say, new projects, amenities in terms of how you're going to, say, reposition those projects or just the leasing process in general. Obviously, COVID has changed a lot of renter behavior, whether it's just, temporary or it's long term. So, one example was maybe the demand for larger spaces, because everyone's starting to work from home a little bit, or, there's virtual tours happening and just the whole process, the digital transactions are increasing as a result of the rental process going digital. What are you seeing, or what are you and your team seeing there? And, is it kind of in line with those trends?
Mitch, first of all, let's talk about what our niche is, and I'll give you the trend line within our sweet spot. Our niche is millennial inner city living. So our amenities is the neighborhoods and the environment around where our buildings are, and they're clustered together. And our trend line it's been very unique, where people are gravitating towards boutique apartments, which is our brand, is inner city living by Mainstreet Boutique Apartments. And boutique apartments means low density, and low density equals health. So I'm seeing a lot of gravitation towards younger millennials wanting to live in low density buildings versus these massive complexes with multiple elevators and lots of people. And you know what's happening with lots of people? Lots of people equals COVID. I've seen a real uptick in the townhouses as well because of the additional space and backyard and front yard as well. So it's low density, mid-market space, which is our space, and townhouses where we have a lot of in Western Canada.
Yeah, I think you're definitely seeing the millennials looking for those unique kind of spaces, making it something that's their own for sure. When we had our prep call, I want to just kind of go off script for a second. When we had a prep call, you said something that I thought was, quite interesting. You were talking about, the apartment industry is resilient, and it's gonna continue to be resilient. Can you elaborate on that a little bit? And, essentially, what did you mean by that specifically?
Interested in being a guest on Sink or Swim? Or have a really great idea for an episode? Email us at podcast@rensync.com.
What came out of the COVID to me and to the investment community and to Bay Street and to a stock price, and let me start off with my stock price. COVID starts, we are in the mid-90s, a stock price, it drops down to low 40s and bounces back to 84 now. What that means is the investment community is realized that the most resilient asset class in the multifamily, not in the real estate universe, is the multifamily. And March's collections was like 99.34%. Where do you get that? So, if you compare yourself to hotels and theaters and commercial real estate, it is the most resilient asset class. Now, there's another really interesting supply-demand imbalance we're going to see in the next little while. Purpose-built apartments. That means these apartment buildings are built for only apartments versus these condominiums that go into the rental pool. So purpose-built apartments, there's only 2.2 million purpose-built apartments in Canada. That's from Prince Edward Island to Comox. And Canadian population is going to grow by 1.2 million people on immigration alone by the press release done by the federal government. So 1.2 million people in the next 3 years, and then we got foreign students, and the total supply is 2.2. And let's say the vacancy rate is 200,000 empty. I'm just speculating, 200,000 empty units. So we got a demand of an excess of 1.2 million and supply of 200. So that's going to be a supply-demand imbalance that we've already seen in places in Toronto and British Columbia and tent cities and so forth. What's causing is the affordable housing shortage. Now, there's another data point that very few people talk about. 73% of Canadians make less than $50,000 a year. So you can build all these fancy buildings. It doesn't cater to 73% of the population. Again, that's why, Mitch, we are in the mid-market space, is to cater to the new immigrants, students, foreign students, the workforce Canadians, less than $50,000 a year. The bricks and mortars are mid-market, but we make them into boutique apartments. So they're not built as boutique apartments. That's our creation, our add value creation in the system.
Absolutely. So as we kind of come to a close, before we get to my favorite part, which is the quickfire round, and maybe you've already touched upon this, but, I guess looking forward, what does the future hold for the Alberta rental market, or post-COVID, or specifically just Canada, in general?
Well, first of all, I believe Alberta is like a Phoenician. It's going to, our economy is going to diversify, and you get the lowest tax rate, and the reality is it's the only affordable major center. What that means is, can you afford to live in Toronto and Vancouver? And what's your plan B? Affordable housing. Do you know Alberta's got the youngest population and the most educated population? And the economy is diversifying. And the wealth of Alberta is not oil, it's the risk-taking entrepreneurs.
As long as you can kind of get over the fact that it's going to be, it's going to be snow until say May. I mean, I think Alberta's a great place to live for sure.
Well, Mitch, unless you love skiing and you love the mountains.
That's right.
And we got dry cold, so it's not humid.
Just to digress, I actually used to live in Fort McMurray, so I'm very familiar with Alberta. So.
Well, there's more to Alberta than Fort McMurray, and there's more to Alberta than oil. So it's Calgary, Edmonton, and dynamic cities, and you're going to see, that's why you're seeing hard numbers of population migration, immigrants into provincial. And you know what? Why discount oil? Oil's at $63, $64 WTI. Pipelines are getting built, and I think in time you're going to see a real rebound in diverse economy and with the backing of oil. Imagine Canada with no oil. Just imagine for a second.
Yeah, it would be definitely, it wouldn't be Canada. Let's put it that way. I guess that's the easiest way of saying it.
We would be importing and it would have a trade deficit. So
as we kind of move into the quickfire round to kind of close things off, where I'll say a statement and you've got about 30 to 60 seconds to reply. Are you ready for this, Bob?
Yes, let's go.
All right. So question 1, what do you believe that others disbelieve?
That Alberta is the center of the universe.
Okay, perfect. That was good. That was short. Second one, as a result of COVID-19, what have you changed your mind about lately?
Health, family, friends, number one priority.
Excellent. And third, do you have any advice for, say, any other real estate investors or developers moving forward kind of in this environment?
It is a long-term investment. It's delayed gratification. And if you play the counter-cyclical game, your returns would be higher, like Warren Buffett's mantra. Because A, it's hedge against inflation. Yep. You got a return, you get paid to wait, and you got capital appreciation. So you knock off all these buckets, check-off boxes, on your investment criteria. Now, if you do believe this Canadian cities, the populations are going to grow, if you believe the cities are going to get densified, and if you believe inflation one day will come back, combination of all these things result in a very decent investment. So, but if you're looking for a short-term gain, stick to cannabis, Bitcoin. If you're looking for long-term returns, go into real estate.
Absolutely. Last, where can people find out more about Mainstreet Equity?
We have a website with an investor presentation. You can call me. We have an investor relation department. Call our IR department. We'll put you on the mailing list. Call me. I'm available, and that's my job, is to tell you about our track record and our business model and our strategy moving forward.
Well, you definitely have a good track record, so I'm sure most people are aware of that. Bob, thank you so much for doing this. That's it for another episode. Until next time, keep swimming.
You've reached the end of another episode of Sink or Swim. Make sure to visit us at rensync.com/podcast to access show notes, key takeaways, and where you can sign up to our newsletter to receive free bonus content. If you found value in this show, please also remember to rate, review, and subscribe. Don't forget to join us next week for another episode. Thanks for listening.